Hi, Joe Kehrig with the Kehrig Real Estate Team, and this is your San Ramon Valley update. What we're going to talk about today is a housing inventory issue, the mid-year update, the 2023 mid-year update. So let's talk about a few things comparatively to last year. One, the supply improves but remains below trend as market returns towards historical seasonality, which moving into the summer, a lot of times inventory will pick up. Affordability continues as 2023's central theme in housing inventory because, again, with the higher rates, the affordability is still very low. The number of homes actively for sale increased by 21.5% year over year, but home sellers were less active this last May with 22% fewer newly listed homes compared to last year. So there's more inventory, but there's a lot less coming up on the market. The median price of homes for sale increased by 0.9% annually in May. You might have heard on the news that for the first time in 11 years, prices actually showed a year-over-year decrease. Homes spent 43 days on the market, which is 14 days longer than last year, but still shorter than before the pandemic. Now remember, we're talking, you'll see in the San Ramon Valley, that timeline has been squashed down because this is a nationwide survey, and in the San Ramon Valley, we are still as hot as can be as far as the market conditions. If you look at this graph, you'll see that in May 2021 where the inventory was, and then in May it was low, and then May in 2022 it was even lower, and you can see it is up. But look at 2017, 18, 19 before the pandemic, which we would consider normal years, and you'll see it's twice as many homes as normally we have on the market we normally would. And now look at the new listings below previous years. So May 2023, we have less listings than we have all the way since 2017. So again, it's nuts. Now obviously you see the listings drop down as you get to December, but this is going to be a good graph. We'll keep an eye on this graph and see what happens. 98.5% of metros in the United States had new listings decrease. Only 1.5% of the metros throughout the United States had an increase in listings. So what we're dealing with here, even though it's maybe worse in a lot of areas, this is throughout the country. This is why Congress is starting to look at. One bill I want you guys to keep a look on is Panetta from San Mateo, California, has a bill out there to increase the exemption. You remember, if you basically sell your home, you can take a $250,000 exemption if you're single, a $500,000 exemption. His bill would increase a $250,000 to $500,000 and $500,000 to $1 million. So it would loosen up the inventory. I have at least 5 clients that if it was $1 million, they would put their home on tomorrow. But because homes have risen so much in the price, they don't want to pay the taxes they'd have to pay because, yeah, they get a $500,000 exemption, but their home's gone up $1 million, $1.5 million, $2 million in this area if they've owned it for 20 years. So the other thing is list prices normalize and reflect market dynamics. You can see obviously the list price trend. The prices are back up. They did dip down, but now they're back up to the peak where they were of June of 2022. Inventory will remain tight in the coming months and even for the next couple of years. Some owners are unwilling to trade up or trade down after locking in historically low mortgage rates. Matter of fact, this is how bad it is. 26% of the people out there have mortgage rates less than 3%. 71% of the mortgages out there are below 4%. And remember, with interest rates have recently gone up, they're 7% or more than 7% right now. So again, 71% of the people out there have mortgage rates less than 4%. So for the most part, 7 out of 10 people, if they sold their home and purchased another one and got a loan, their interest rate would double. And that's what's locking people in. And because there's a lack of inventory, they don't even want to try to sell because they give up their rate and then they might not even find another home. So we definitely need to loosen up the market. Obviously, helping with the tax situation will definitely help that. So let's look at the update and look at San Ramon first. You can see that basically it's staying fairly stable, but again, more pendings than active properties. Remember, if there was half as many pendings as active, it would still be considered a seller's market. And here you have where pendings are still above active properties. The Danville market is almost even all the way down the board, 59 active, 56 pending. So it's almost reached the same point where there's more pendings than active sales. You look at the Blackhawk market, again, pretty steady. Pendings are up. Inventory's up a little bit, so that market is staying strong. Alamo staying, you see pendings have actually dropped down quite a bit, but let's see what happens. We're just coming out of the 4th of July holiday. So the next couple weeks are going to kind of tell us where we think the market's going to go. But I'm telling you, don't expect a flood of inventory coming up because of what I talked about, people being basically handcuffed in to their homes. That's one of the reasons that you're seeing so many. You drive by and you see 4 or 5 remodels on every street. The reason why is because people are sitting there with a 3% loan. And rather than go purchase something new, they're trying to make their current home their dream home. The best job in the world right now is to be a contractor. You'd be as busy as you ever could want to be. The Dublin market, you can see pretty steady all the way up, but inventory did jump up a little bit. Again, I think that's because of the 4th of July week and the holiday and graduations. It's going to be interesting to look at the next couple of weeks. The sold to list price percentages, you've kind of seen an equilibrium come out where we were obviously at 92% and everything was 105 and 106%. Look at this. I have San Ramon, Danville, Blackhawk, Alamo sold exactly at 100% of asking. I was so hoping that Dublin would come out the same way. But Dublin's market is still hot, 104% of asking. But all 5 areas the last 2 weeks have been 100% or more. So here's the bottom line. If you have a nice home and you've done some cosmetic updates that we've talked about before and you price it reasonably, you're going to sell and probably get multiple offers. There are still some homes that are staying on the market. The ones that maybe need remodeling are overpriced. So we're kind of somewhat in a normal market like that. The first 6 months of 2022, the hottest market that we had, didn't matter what the home was all about, it would sell. Now it's back to a normal market where you have a situation, if the home's priced right and it shows well, it's going to sell and probably even get multiple offers. But if it needs some cosmetic work or you're priced too high, it's probably going to sit there before you lower the price. Every market's a little bit different, as we talked about. You know, every home, if you want to talk about what upgrades, we talked about that last week, what upgrades will maximize the value for your home. You want to spend $1 and get $3 in return. Give us a call. We can meet you out there, walk you through it. Even if you're just remodeling for yourself and not thinking about selling, use us as a resource, because you might sit there and go, I'm not ready to sell now, but I want to make sure I put smart money into my home, money I can get back. Give us a call. We'd be more than happy to stop by and walk through with you. Again, Joe Kehrig, 925-487-6838, or drop me an email at joe@kehrigteam.com, or visit our website to look at all of our listings and learn more about us, www.kehrigteam.com. Have a great week. Can't wait to see you next week.